Welcome. Thank you for finding me online regarding the USDA program in Southern California, mostly the mountain communities in the San Bernardino Mountains. You're looking to purchase a property. You're limited on funds. You do not have to be a first-time home buyer. So this is not a first-time home buyer program. It's great for first-time home buyers, but it's not a first-time home buyer program designated for somebody who has not owned a property in the last 3 years. That's what's designated first-time home buyer. You could have owned a home 5 years ago, and you're considered a first-time home buyer because you haven't owned or been on title of a property in the last 36 months. But this is open to anybody and everybody that qualifies for it, so you do not have to be a first-time home buyer. The cities in the mountain communities of San Bernardino Mountains in California are Angeles Oaks, Big Bear City, Big Bear Lake, Blue Jay, Cedar Glen, Cedar Pines Park, Crest Line, Fawnskin, Forest Falls, Green Valley Lake, Lake Arrowhead, Lytle Creek, Rim Forest, Running Springs, Skyforest, Sugarloaf, Twin Peaks, and Wrightwood. All those 19 cities are in the mountain communities of San Bernardino County that you can purchase a property on the USDA home loan program with absolutely no money down. That's no money for the down payment. You are going to have money that you're going to need for closing costs, home inspection, and the appraisal. Also, you're going to have an EMD, an earnest money deposit. So you have to open up escrow with some kind of an EMD. Earnest money deposit, but do speak with your realtor about how much you are willing to open escrow with. Now, that EMD, earnest money deposit, will not go for the down payment. It will go towards closing costs. So that money will be accounted for. If you elect after you do the home inspection or the appraisal doesn't come in at value, then you can renegotiate. But if you pull out from the deal, do speak with your realtor about that because you do have contingency periods. And in those contingency periods, you have time to get your home inspection and your appraisal done. You can back out, and whatever you deposited, the earnest money deposit, you will get those funds back as long as you did it within your contingency periods, but do speak with your realtor about that to make sure that you're informed about your deposit. But if you like to go through, you buy in the house for $250,000, $300,000, whatever the agreed upon purchase price is, that money will go towards the closing costs. The great thing about purchasing on the USDA, the property has to be, and I'll have a link if you're listening to this on a podcast, but if you're on the video or on my website, there'll be a link below on a video on how to find the USDA approved lending areas. But all these cities, the 19 I just mentioned, all those homes in there right now are approved on the USDA home loan financing as long as you qualify for it. When it comes to income, the property is designated in the approved areas and you meet the debt ratio and the credit threshold. There are some variables when it comes to the credit. That's where you need to speak with a loan professional such as myself to go over the credit. Lenders will have their minimum credit scores. USDA says you do not have to have a credit score, but you have to have some type of credit to gauge your lendability on. Some lenders will go down to a 580, a 620, a 640, and that will move depending on their circumstances. So USDA says, okay, we will insure and lend to somebody with a 500. You just need to find a lender that will do a 500. Most lenders are 620 and above, and or 640 and above starting point. So do speak with me or a lender that you're comfortable with on the qualification when it comes to credit. Also, the property must be in an approved lending area. Those areas can change when the census come out. So as I'm doing this video, those 19, or excuse me, this video and or podcast that I'm doing, the 19 cities I just mentioned are approved on the USDA program. So you can purchase a home as an owner occupied. You cannot utilize the USDA home loan program as an investment property and or second home. This must be your primary residence only, okay? Purchase as a primary, no money for the down payment. And right now, there are debt ratio requirements. Unlike VA, VA, FHA, or conventional, they'll allow you to go up pretty pretty high debt to income ratio. The debt to income ratio is what your debt is versus your income, your gross income for a W-2 wage earner. So you have your front end debt to income ratio, which is your housing expenses. So you can not exceed a certain threshold, which is 29%. So we take your gross income and times that by 29%. Your housing expense cannot be more than 29%. That's principal and interest, taxes, property taxes, homeowners insurance, mortgage insurance, flood insurance, earthquake insurance, stuff like that that's in an HOA that's in your front end debt to income ratio. Your back end debt to income ratio cannot exceed 41%. That's going to include the housing expense and then all your other expenses such as credit cards, student loans, child support, alimony, auto loan, anything that's on your credit report and or that's getting deducted from your pay stub will go into that back end debt ratio of 41% along with the mortgage payment. Now, USDA will allow you to exceed those thresholds of 29.41 to 32.44. 32 front end, that's all the mortgage items for the house. That does not include utilities. They don't count that in your qualifying debt ratio. It's the payments that's going to go towards that home. And 44 on the back end. You must have a 680 plus credit score at this time to allow yourself the 32.44. If you have a 640, you're going to be capped at the 29 front end and the 41 back end. Okay? So hopefully I didn't go too fast during that, what the 29 and 41 is, or the 32.44. So you can't exceed that debt to income ratio. USDA is not going to insure a property that has a front end of 45 and a back end of 56. That's something like a USDA or VA will allow that, but the USDA has those strict guidelines, and there's no going above that. It's not 29.5, it is 29. So 28.99, it's not 29.99. It is 29% and nothing over that. Same thing on the back end. 41% back end debt ratio. It's not 41.5, 41.99, 41.03. It needs to be 41 or below. So we got to look at your debt to income ratio, and that's where we need to credit qualify you and income qualify you. You don't need reserves in the bank unless you want to go push that threshold of the debt to income ratio, a 680 plus 3 months reserves. So that's where we got to look at your overall picture, and that's why I want to talk to you about getting yourself qualified for the USDA. The income. Right now there are income limits, and they've been going up every single year. So right now, being the mountain communities, that's going to be San Bernardino County for the USDA. You cannot exceed a certain income threshold, which today is at $104,650 up to 4 people. That means you cannot exceed your gross income of $104,650 a year, up to 4 people. If there's 5 people moving in the household, then it's $138,150. So it does go up significantly if you got 5 plus more dependents going in the household. So if you have a mother-in-law, a family member moving in with you, let us know that. Okay, how many dependents are going to live in the household will determine how much income you can make. Now, this is everybody living in the household. So this is not one person getting qualified that makes $104,000. If you and your spouse or you and the dependent, 18 years of age, making more than that $104,000, you won't qualify for the USDA program. It's everybody in the household we must qualify for the income. They don't go on the loan. It's just if that many people are in the household making that much money, USDA says, well, you guys can go out and do a traditional FHA or conventional type loan. So if you do not make more than that $104,650 with 4 people or below, then right there your income qualifies for the USDA. Obviously, you got to have the credit and the debt to income ratio to fully qualify for the USDA home loan program in San Bernardino County in the mountain communities. So if you're looking to purchase a property and you have limited funds, heck, you don't even have to have limited funds. You can have $100,000 in the bank and you still can qualify for the USDA. They're not restricting you with your not being a first-time home buyer, and they're not restricting you how much assets you have in the bank. they are going to restrict you in the 3 areas. The major areas are the income limit. You cannot exceed a certain threshold, and it will vary from county to county. But the San Bernardino County is at 104, 650,000 up to 4 people. The debt to income ratio, you cannot exceed the threshold that I talked about earlier. That front end debt ratio and the back end, you cannot exceed those thresholds. And then also the home must be in an approved lending area. So those kind of the 3 caveats that USDA have. But, wait for it, USDA will allow you, and this is the only purchase program that will allow you on a purchase transaction, finance your closing cost. That's right, you can finance your closing costs on the USDA program. But the property must appraise higher than the agreed upon sales price. So let's say you're purchasing a property for $300,000, it appraises for $310,000. We can use that freed up equity to finance your closing costs, but it must appraise higher than the agreed upon purchase price. So you open the escrow with $1,000, that EMD, earnest money deposit I spoke about earlier. You spoke with your realtor and you said, I want to open up escrow with $1,000. So it's no money for the down payment. If it appraises for $300, great, we finance $300. If it appraises for $310, you're buying it for $300, we can finance your closing costs. So that $1,000, you get that $1,000 back. The only 2 out-of-pocket costs you're going to have is the appraisal fee and also the home inspection. Home inspection is not required, but highly, highly recommended to do. So you can purchase a property when the moon's aligned and when it becomes a buyer's market. Right now we're in a seller's market as I'm doing this podcast. You can purchase a property when it becomes a buyer's market with no money for the down payment and no closing costs can be financed in the appraised value if it comes in higher than that $300,000. So we can finance that. So if it's $6,000, $7,000 worth of closing costs, your loan amount is going to be $307,000, $308,000. That's what the loan amount is going to be because we're going to finance your closing costs. So you can purchase a property with as little as around $1,000 or below with the home inspection and the appraisal that you can own a piece of property. Connect with a good realtor. If you don't have one, we'll connect you with one. They can find you a good deal. This is a great, great program with no money for the down payment that is required. You can bring in a down payment if you like. The program, the interest rates on the program are just as good as a VA or an FHA program. You can put 1% down. The required for FHA is 3.5%. The required for conventional is 3%. So you can come in with no money down, or you can come in with as little as 1%. Of course, I don't know why you would do that, but I would come in with no money down. We work the numbers for you. We present your options. Purchase a property in one of these 19 cities in the mountain communities of San Bernardino County of California, Southern California. Let's talk about the USDA. The realtors that are seasoned realtors up in the mountain communities of San Bernardino, they know about this program. You as a buyer may go, I'm looking in San Bernardino, I'm looking in Fontana, Colton, in that particular area. You don't want to go up to Victorville or Superior or Atalanta. I want to go up to the mountains, maybe for the weekends. I like being up there after I get off work. Obviously, you live there because it's your primary residence. But you want to stay up there on the weekends. It might be a little drive for you. You might get used to it, but you want to own property. Then this is the best place to own property and affordable and no money down. Yes, it might be a little drive up the mountain. Snow days, you might not be able to get down. But talk to your realtor, if you already have one, about the USDA program up in the mountain communities. I love to connect with you and talk to you about the USDA home loan program in San Bernardino County in the mountain communities. Great, great program. No money for the down payment. My name's Nathan Rufty. I'm a loan originator licensed in the whole state of California. Connect with me, text me, or call me at 909-503-5600. Thank you very much for listening to this podcast, and I look forward to hearing from you.